Hey everybody, Walmart stock has surged by nearly 60% over the past 12 months. That is compared with a 7% rise in the S&P 500 during the same period. But with this retail giant currently trading at 36 times forward earnings, is this reliable retail stock price per perfection, or does it still have room to run? Today I'm going to break down Walmart's current position, examine the threats and opportunities of the business, and give you my prediction for where this retail juggernaut will be 12 months from now. So let's start with current performance. Walmart just wrapped up a stellar fiscal year 2025 with impressive momentum. In its fourth quarter earnings report, which was released in February, Walmart delivered 5.1% net sales growth, along with operating income growth of about 8.3% year over year. And those are particularly impressive considering the challenging retail environment where we see consumers pulling back on spending in a lot of ways. So Walmart's global e-commerce sales were a particularly strong point. They jumped by 16% year over year, and the US e-commerce business was a 20% year over year grower, really impressive there. So what's really catching investors' attention how Walmart is transitioning its business model. So during the earnings call, CFO John Rainey highlighted that Walmart's global advertising business grew by 29% in the fourth quarter and 29% or 27% for the full year, reaching about $4.4 billion. That's from advertising. Meanwhile, Walmart's US marketplace revenue increased by 37%. Nearly 45% of orders are now fulfilled with Walmart's fulfillment services, a logistics solution that handles storage, packing, and shipping for third party sellers. So let's look at the broader retail landscape and the trends that are affecting Walmart's future and just kind of see what we have there. So looking at the industry trends, Walmart has proven to be remarkably resilient despite headwinds like tariffs, inflation, and elevated interest rates that have dragged down many of its competitors. So Walmart stayed ahead not only because it is a discount-oriented retailer that people like to go to when they're cutting back, but they've done a good job of renovating stores, upgrading its e-commerce business in particular, and using its physical stores as its own fulfillment centers. During its latest earnings call, CEO Doug McMillon addressed potential tariff concerns directly. He said, tariffs are something Walmart has managed in one way or another for many years and will continue to manage. They plan to handle tariffs through three approaches: by leveraging their scale to negotiate with overseas suppliers, by pre shipping products before tariffs take effect, and carefully managing price increases as tariffs go into effect. So, with that foundation, let's explore the bull case for Walmart stock over the next year. So, the bull case is that Walmart continues to gain share across all income levels and across all areas of its business. Interestingly, during its earnings call, management noticed that upper income households are actually driving most of Walmart's recent growth, showing that the company is attracting customers beyond its traditional base as upper income households feel the need to pull back on spending. Walmart's diversification strategy is also really helping out newer business lines like advertising, which we mentioned earlier, membership programs, and marketplace services contributed over half of Walmart's operating income growth in the most recent quarter, according to their CFO. Analysts are more optimistic than Walmart's own management about its future growth. The company is predicting just 0 to 4% earnings per share growth for the current fiscal year, which is 2026. Analysts are expecting 5% growth, followed by a surge to 12% in the 2027 fiscal year when the current economic turbulence dies down. But every investment has its risks, so let's examine the bear case for Walmart. So the bear case is valuation, plain and simple. Walmart's forward price to earnings ratio is 36, and it looks stretched compared to its historical average. Just a year ago, Walmart traded for just 24 times forward earnings. So this is 50% higher valuation than just a year ago. There's also the tariff uncertainty to consider. While Walmart's management sounds totally confident, new tariffs could squeeze Walmart's margin if the company can't figure out how to fully offset them through price increases, supplier negotiations, or some other way. Finally, any significant consumer spending pullback could hurt Walmart, just like any other retailer. They tend to be more resilient, but a consumer spending pullback would hurt. That's especially considering its premium valuation. It becomes more of a risk because that valuation is pricing in really strong execution and strong resilience no matter what happens. So we're going to talk about one big metric investors should watch. So, in my opinion, the key thing to keep an eye on is Walmart's e-commerce profitability. During the recent earnings call, CFO John Rainey said that e-commerce incremental margins reached 11% globally in the quarter. That's more than double Walmart's overall margin. So he also mentioned that Walmart saw an 80% improvement in e-commerce losses over the past year. So as e-commerce grows to represent a larger portion of Walmart's business, continued improvement in these economics will be crucial for keeping profit growth that outpaces revenue. Where will Walmart stock be in a year? Obviously, we don't have a crystal ball. If the company manages at or matches analyst expectations while maintaining its current forward multiple, which is a big if, the stock could rise about 9% to about $97 by early 2026. However, if that forward price to earnings ratio slips back toward 24 that we saw a year ago, we could see a significant pullback in the stock, about 20%. So, given Walmart's strong execution but stretched valuation, I believe that its upside potential over the next 12 months will be rather limited. However, Walmart remains a well run business and a sound long term investment, but I would probably wait for a pullback here before accumulating more shares of this retailer. So, if you're ready to discover more investment opportunities in retail and beyond, go to fool.com/invest to receive the top 10 stocks to buy right now. So that's it for today. If you found this insight valuable, hit that like button, subscribe for more, and help make our community smarter by sharing your thoughts and insights in the comments below. Stay foolish, and we will see you next time.